Hi guys, hope everybody is doing good. Merry Christmas. I hope you guys are enjoying your holidays and staying warm. We had some of the craziest weather here in Vancouver. We had snow, we had freezing rain, we had black ice. It's just been ridiculous. So finally, we are able to get out of the house. So we're having a family dinner today, but I hope you all enjoyed and got some time to spend with your family and friends and relax. Market is open right now. I'm actually recording this video on Monday evening. Um, and so we'll go over some of the things, what's happening and what happened last week. What a turnaround from, Bank of Japan for coming out and making the changes in their policy that hasn't been changed for a long time right now. And that really caught the market by surprise. So if you guys don't know, and Japanese investors are, there's like over $1 trillion in the US market, or you want to call it, is in the US treasuries, that they are the biggest holders actually in US, in UK, and in Australia. So now their government offering, what they're offering is meaning the cash is going to start to stay in Japan instead of leaving that money out into, the US market, the UK, and the Australia market. So, which means we're going to see that money leave out of these markets and kind of stay in Japan. So that will impact. You're not going to see that impact, I would say, right away, but we saw that news how the market reacted, and that's good for their own people, like for their own investors. So they're going to keep that money at home instead of that leaving out. So over the course of next few months, I think we're going to hear more and more, and we're going to see that impact more and more as well. And you saw how the 10-year jump, the 2-year jump, their own Japanese, all of those bonds and yields, it was crazy on December 20th after that news came out. It was more so by the surprise that market reacted it, how it reacted it. So we'll look at some of the charts, what's happening, what's coming. I don't have many of the charts, to be honest, that I looked at it. So I'll just be going over a few of them. And then I believe 2 of them that I'm really watching to see how and when we can get an entry in those ones. So let's look at what we have coming up. Right. Okay. So looks like we have this Tuesday, so which is tomorrow, we have the US home price coming, and then pending sales on Wednesday, and then obviously Thursday on jobless claims, and then Friday Chicago PMI. This is the one that you do definitely want to pay attention to it, what's happening. And then after that, the next week is going to be interesting because we got the FOMC minutes coming out, and that's going to be the beginning of 2023 as well. So let's see what we have coming up. So right now, actually, market opened a few minutes ago, and we gapped up. So this is now a gap on future side that has been left. We'll see how it works, if they're going to fill it overnight or not. I'm just going to change these colors. I have different color for the gaps, so I don't confuse myself. Oh, wrong color. Jeez. Okay. Anyways, so we have this order block that was, on Thursday is where we bounced from it, and it came back and touched this pretty much that area of 37.87. Sorry, 37, I want to say 87. Yeah, 37 to 87 is the area. And then we retested this daily volume imbalance that is there. So for this balance to be completed, we need the candles to get through it. And so once that gets through it, that's basically is considered the imbalance has been, well, at least that's how I read my charts. I consider this to be imbalance being taken out. And then we right away, we have the fair value gap, and then we have another order block, and then we have another daily volume imbalance at the top. However, if we are heading upwards and you get to 39.17 or 39.30 area, and it is struggling, even if it's a touch of this fair value gap and gets rejected, we will probably have more room to the downside than to the upside. So keep that in mind. 3,900 is also a pretty strong and key level, and it struggles a lot in that zone. So watch the 3,900, and then the next is 39.17 to 39.30. If we are crossing that, then you got your 39.40, 60. All those levels are on the upside of it. But however, any of these levels being rejected, you got more room to the downside of. This was the day that we were looking for our turnaround on. I had said, I think last video, that Wednesday, the 21st, was where I was looking for a day where we will see the turnaround, and that's exactly what we got right here. So now looking at where we are with things, I think, again, second, third week of February or beginning of March, we should be putting some sort of a new lows on SPX, on SPY, all of those charts. All right, so here we have the SPX, pretty much the same story with this one as well. So you want to, again, watch on this one as 38.60 and 38.80. Those two levels are pretty strong. And then you have your 10 moving average, and then you have the 200 moving average coming up as well. If we late center rally, if we do get it, if we start to break out of here, but if we don't, I think more room to the downside for this to continue to come down before we see any of making new higher highs or breaking out of these zones, because this, I would say, broadening pattern is paying out, working out pretty nicely. So we'll see what happens in this week. And then obviously the FOMC meeting coming up after that. All right, that's your SPY. SPY's been rejected at 379, 380 area multiple times now. So you want to, if you are planning to go short, I would highly recommend that you give yourself extra few dollars, like the 30.77, 30.75. So it's not a fake out. Let it break, let it hold before you jump into a lot of puts, because you have to also remember how the market makers make money. So when the retail traders are all very bearish, that's when you will notice that they tend to run the market. So what happens is your puts lose value, and when the market runs, they are squeezing you out of those puts, basically. So always keep that in mind. If you are seeing way too many people are way too bearish, and your charts are not lining up with that, and you especially don't have candles closing below, wait for a confirmation. You rather pay a little bit more money than to be caught on the wrong side of it or be part of that squeeze. So pay attention to that. So that's what I am watching on these. The two that I am interested in is Netflix. Okay, so we pretty much filled this gap very nicely, moved up, filled the gap, rejected right at that 332 level, and we're coming down. If you get a bounce, which is to the upside, and we break out of the 10, and you see Netflix anywhere between 310 to 320, this 21 area. This has a very nice bearish divergence setting up, but I think we still need a small bounce on this before we jump into a put. So any of these rejections in this zone, it is going to be a beautiful put that you can write it down to the 200 moving average. So that's what I am watching on Netflix. And then the next one, no, not the one, GS. This is the one that I'm watching. Another one. So this one rejected beautifully. We've actually been in it a few times now in GS for put. And this has rejected nicely in the supply zone. It still needs to come back and retest this zone one more time. And when this retest happens, even if you find it anywhere in, the 360, 365, or even 355 zone, with the time, this thing has a more room to the downside than to the upside. So that's another one that you want to keep it on the list. Costco, we'll go over a few quickly. All right, so Costco actually played out that pretty nicely, and on the weekly we had this diamond that worked out very nicely, and it is bouncing from this zone that we had. Actually, this sport I've given you guys from the beginning of my YouTube channel journey, or whenever I first shared this Costco, and it's bounced perfectly from this level. So any bounce up, reject at the 10 or reject at your diamond, it is gonna come back and down to the 382 area, or even this zone right here, 480. If it does not break through it, definitely has a more room to the downside. Forgot to look at a dollar. I'll look at it quickly. Okay, so this is our daily chart on the dollar. This trend line has held very nicely. For market to pull back, dollar needs to cross above this 104.68 and this 200 moving average for it to continue to move up, and then we'll see the pullback on the market. Let's look at the VIX as well. All right, same thing with the VIX. I've been telling the group actually that we need VIX. The candle has to close above 2347. We've tested it, we've rejected it here. Even this day candle closed below, did not close above. So we need to close above here for us to continue to see rest of the market starting to pull back. So keep these levels in mind, and we'll see what we get for next week then. And I will see you guys next weekend with the, we'll see what this week brings. And thank you so much for your support. I really appreciate it. Thank you for all the encouragement. And please don't forget to like and subscribe. I appreciate each and every one of you. Thank you.